Hello, everyone, and welcome to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today we'll be having a very interesting session. So we'll be trying to understand what are the key market drivers today. We know that yesterday was quite a tricky day, and this was because there was 2 bank holidays. One on in the US, they were celebrating the President's Day, and the equity as well as commodities markets were closed. So also Canada was celebrating Family Day, and some of the banks were closed, so we had relatively low liquidity and markets did not move much. However, today volatility picks up and now we are starting to see major movements in the markets. And as a result of these movements, we are expecting to see quite a number of opportunities emerging on the major currency pairs, on major commodities, as well as equity indices. So before we make any progress, I would like to begin with a mic test. So if you can hear me, kindly comment on the live chat section. So if you can hear me clearly, kindly mention on the live chat section, and this should confirm that everything is working just fine. So hello, Caroline. Hello, Richie, as well as David. Thank you for your responses. I really appreciate this. So let's get going. So the first thing that I'll be trying to understand is the key highlights on the economic calendar and what we're expecting for the day. So the first thing that you notice was a couple of speeches from Bank of England Governor Bailey, Bank of England Broadbent, as well as Dingra. Then we got the inflation rate, which is a major key event for the day. And this is a Canadian inflation rate, which was reported at 3.4% in the previous reading. So this reflects the annual inflation in Canada for the month of December last year. And this was quite a big number, especially considering that the target inflation in Canada is 2%. So in this case, the central bank still have 1.4% to go before it achieves its inflation target. So in order to achieve this, the Bank of Canada has had to do quite a number of things. And one of them is to hike interest rates to the current level of 5%. And this level has held steady since July last year. So holding interest rates at 5% is expected to be restrictive enough to force market forces to lower inflation and get it to 2%. So investors are following today to see the direction of this inflation, whether it moves higher or lower. So there's an overall consensus estimate that the inflation in Canada likely reduced to 3.3% in the month of January. And today we are waiting for the official outcome. And this will be happening at exactly 4:30 p.m. So besides the overall inflation rate, investors will also be focused on other data on the report. And one of that is the core inflation rate, which was at 2.6% in the previous reading. And now we're expecting this to drop to 2.5%. So in month-over-month readings, in December, there was a big drop of negative 0.3%. And now for January report, we expect that the consumer price index basket increased in price by 0.4%. So there will be other data, including CPI median year over year, trimmed mean, as well as a core inflation rate month over month. But I believe the major focus will be on the inflation rate year over year, core inflation rate year over year, as well as the change month over month. So how do we interpret this data? So the data is used as a leading indicator of central banks' action. So the Bank of Canada is expected to start cutting interest rates as early as June this year. And one of the conditions for the Bank of Canada to start cutting interest rates is if inflation moves towards the expected direction, and that is 2%. So if inflation jumps higher and let's say stays at 3.4% or even moves higher than that, then it's likely that the Bank of Canada will continue tightening policy, thereby holding interest rates higher for longer. So as a result, the overall expectation is that we see a much stronger Canadian dollar as a result of the high inflation, as investors will be betting on high interest rates staying higher for longer. So on the other hand, if inflation is reducing as expected, and let's say annual inflation rate drops to 3.2% or even lower, then that would be a likely indicator that inflation is moving as expected. And now there will be expectations that the Bank of Canada may go for early rate hikes. Rate cuts. And if the Bank of Canada goes for rate cuts, then that tends to weaken the currency. So in that case, we should be seeing a much weaker Canadian dollar. So having this in mind, then as we approach the charts, then there's what we should be expecting. So let me try and switch to the MT5, and then we look at what we will be likely expecting in the markets. So first things first, we look at the USDCAD currency pair. So just give me a moment. So this is the US dollar against the Canadian dollar, and as you can see, it has been on a slightly bullish channel. And this is dating all the way back to the start of the year in January, and all we have been seeing is a momentum upwards, down, up, down, up, down, up, and now we seem to be on a downswing since the market just moved from the upswing. So from a technical analysis perspective, it basically shows that the US dollar has been slightly stronger than the Canadian dollar for the better part of the year, and this has been the trajectory of USD-CAD currency pair. So knowing this, there's that expectation that this trend might continue for a while until something changes fundamentally, and the change could as well be the trend in consumer index prices. So this means there's a good likelihood that we could be seeing some good activity in the markets happening later today, and that good activity could lead to potential market opportunities. So hello, Obeng. Hello, Holyfield. I can see Augustine, Tony Dark in the house. Thank you guys for joining the session. So if you have any questions, feel free to type them and I'll be responding in the live comment section. So knowing what we know and looking at the price action from last week, we can see that the markets started here. Went for the first 2 days strongly up until it got to this resistance, formed a nice reversal pattern here before erasing some of the gains and ending the week here. So this week on Monday, we started with a slight bullish momentum. So from the 1 hour chart, you can see the slight bullish momentum, even though the markets were sideways. Today, in the early Sydney session, there was a big jump before the market changed direction and moved further downwards. And of course, now that we're in the London session, heading into the New York session in about 15 minutes, we are seeing the US dollar being weak, much weaker against the Canadian dollar. So from the 4-hour chart, this is how it looks like. And from the daily chart, you can see that there was a big drop followed by a jump upwards. And now it seems like there's a lot of confusion here, which is likely an indecision area. So before we make any progress, let's compare this with the dollar index. So remember, the dollar index is a measure of the strength of the dollar against a basket of 6 other currencies. So in this case, what we are basically seeing is the dollar being extremely weak against these other currencies after making the big rally on Tuesday last week. So for 4 consecutive days, we have seen the dollar weakening, and today being the 5th one, we have completely erased all the gains that were made on this particular Tuesday. So this shows that there is a increased consensus in the market that the dollar is pretty weak. And with a weak dollar, you want to trade that against a strong currency. So this means that the USDCAD would be best traded if the news strengthens the Canadian dollar. So if you see the Canadian dollar being strong as a result of a strong inflation number, then it might be an interesting idea to look for a position that targets the lower trend line. And this could run maybe just for today or even for the better part of the week. And this is based on the news announcement that we're expecting at 4:30 p.m. So also remember that there is the likelihood that inflation comes out just as expected and we don't get much of an impact in the markets. But then if there's a big difference between the expectation and the real outcome of inflation report, then there's a good chance we could be seeing the market dropping here. So the alternative is also true. Remember, we are almost at a critical central point. So if we happen to see a weakening Canadian dollar, then the US dollar could rally against the Canadian dollar towards the previous high and potentially land around 1.35812. So besides that, we have other market activity in other pairs. For instance, gold has completed the cycle. So I remember analyzing this yesterday and mentioning that this trend line is critical in trading gold, especially when you consider the forward chart and what has been happening. So we have had this triangle extending all the way from November last year, and eventually the market finally made a breakout towards the lower side. So gold has really struggled to cover this breakout, which happened on Tuesday last week. So for 5 consecutive days, gold has been rallying, and now we are back towards the trend line, and this is where we are observing the price action. So the idea is clear. If gold gets right back into the triangle, then we expect a rally towards around 2047 price levels. And the triangle continues. In fact, this is 2050. But then if technical analysis is anything to go by, then we expect to see some further downside momentum all the way down towards the base of the triangle. And this is around 1974 price level. So the expectation is that if gold doesn't get to break that price level of 2027, then we see a sudden drop towards the lower side. And this has the potential to accelerate downwards to a price level of 1974. So the most interesting chart for the day today is the NASDAQ chart. So remember, NASDAQ has been forming higher highs for the last couple of months. So looking at last year, it was extremely bullish. Then we had a slight channel, basically starting around July, and then dropping all the way down to the month of October before deciding to rally and close the year on a high. So this year, we have only been seeing higher highs. So in January, we started with a huge drop, and then the market rallied all the way up, forming higher highs, and then ended the month here. Then in the month of February, we continued forming even higher highs, and that has been the story of the NASDAQ. But then one key break is very important to observe. So since the 5th of January, where we saw this low, the better part of the year has been above this trend line. And every time the market has gotten to this trend line, buyers have come in and pushed prices higher. So it also happened here, and this was on the 13th of February, a day before the Valentine's, and then rallied all the way up. But what we are seeing here is signs of weakness on this trend. So the very first sign of weakness was when the market was unable to form higher highs. So in this case, if you compare between this high and this high, you might notice that the market formed a lower high. So the other key idea to observe in the markets is that this area seems to be having some pretty nice support for the NASDAQ 100 index, and it has been tested 3 times, and this is yet another opportunity for the market to retest this support area of around 17,472. But then a key break of this trend line is also our weakness indicator. And this implies that there is a likelihood that the market could continue further downwards. So there is a couple of things to consider, and one of them will be the FOMC meeting minutes later in the week. And of course, tomorrow, one of the major components of the NASDAQ index which is NVIDIA, one of the companies that have made the strongest rally in the last year, is expected to be reporting Q4 earnings tomorrow after market close. So this could likely lead to a bigger sell-off in the NASDAQ 100. And this is based on the expectation that NVIDIA misses earnings expectations. However, that has not been the culture of NVIDIA earnings over the last couple of quarters. There's a very strong positive expectation that NVIDIA will beat earnings expectations and as a result lead to the recovery of the NASDAQ. So key potential targets for the NASDAQ includes a recovery towards the previous high and forming another higher high. And this is based on a positive outcome of NVIDIA earnings. However, if this doesn't happen, then January's low, that is the lowest price that we saw in January, could be a nice target. We could be seeing price accelerating downwards and getting to the previous low of 17,122. And that's the overall expectation. So for today, we could be seeing some further downside momentum, but NVIDIA earnings are expected to increase the momentum in the market, either to the upside or to the downside, depending on the outcome of the earnings. So the Dow has also been weakening, formed a lower high, hasn't broken the lower trend line, but it seems to be strongly correlated with the NASDAQ. So we could be seeing a similar correlation with the Dow Jones Index. And of course, for the S&P 500, it also made a lower high. And now we are on the verge of testing yet another momentum downwards. If you draw a trend line across the recent lows, and this is since January, you'll notice that the S&P 500 hasn't broken the lower trend line yet. So we will be watching to see what happens when the market gets to this particular trend line, whether there will be a bounce or a straight up break towards the lower side. So Brent oil is basically ranging. We are not seeing much of a price action here. So what I'm observing here is what looks like a diamond formation. Diamond that is slightly edged towards the upper side. So the diamond formation is formed by 4 consecutive trend lines that seem to be changing directions. So the first trend line was moving up, higher highs, then lower highs, then from lower lows to now what we are seeing as a seemingly higher lows. So in this diamond formation, it's often taken as a reversal signal. It hasn't happened yet. We will yet confirm once the market breaks either of the 2 trend lines. So as of the current candlestick and the price action we are seeing here, it's strongly indicating a rejection of lower prices. So in the short run, we could be seeing the market now headed for the upper trend line and perhaps getting to around $82.8 or $82.9 per barrel of oil. So it's a very short-term trade, potential movement. So in this case, the market stays within the diamond, but the breakout is what gives the real opportunity for oil traders. So European equity indices have been moving sideways since Friday last week. So Friday, Monday, and Tuesday is still sideways momentum. So we remain put and wait for some form of breakout, either above this level of this or this other level here. So Bitcoin still trading within a range, so we don't have a breakout yet. So we stay put, remain positive, and wait for the eventual signal when the market breaks either of these 2 trend lines. So for the French 40 index, we managed to retest last week's high, and now the market is about to make a decision whether to continue with the upwards trajectory or the upwards momentum, or to make a reversal from this point onwards. So this could be correlated with the NASDAQ. So we could be seeing the market making a reversal from here. And from the day chart, as you can see, it is an all-time high. So USD trading against the Swiss franc, also a similar thing. So instead of getting a straight up reversal, what we are seeing here is a slightly bullish channel where the market is forming higher highs and higher lows, but on very low volatility. So no real momentum here until we have some form of breakout. So New Zealand USD also making a break and a run for it. So after this morning's news, what we are seeing is the New Zealand dollar strengthening against the US dollar. And now that we have a confirmed break, that it basically makes sense to now start looking for bullish positions, but also be careful of a potential retracement. So sometimes the market will make a break, pull back downwards, retest the area before proceeding with a strong momentum upwards. So this is something that you should be watching out if you're on the bullish side of New Zealand USD currency pair. So as for other pairs, including USDN, what we are seeing is a market that found resistance here, made a big break on Tuesday, reversed in 2 days, a very nice retest, moved higher and then lower and then higher, lower. And what we are seeing here is now something different. What, in my opinion, looks like a triangle. So the market is basically trading in a triangle, and at some point we'll be expecting to see a break. So triangle can be shaped by these two trend lines. So a big move up and then down and then up, down, up, down. And now we will be waiting for an eventual breakout, and that could present a nice trading opportunity. Remember, the closer we get to the interaction of the two trend lines, the higher the possibility of a breakout. So as for Euro USD, we are seeing a strong momentum upwards. The market is approaching a key level, key decision area. So we saw the market hitting this area here, finding resistance and moving back downwards, but eventually the market has approached the upper trend line. And once it gets here, there is only either of two outcomes, a straight out break or a reversal. If there's a reversal, we trade downwards. Then if there's a break, we trade upwards. So remember, this is not investment advice, neither is it a recommendation to trade. So always try and do your own due diligence. So the pound is also making some form of momentum against the US dollar, and we are still on the journey towards the upper trend line. There's some form of confluence levels around this area here, which has previously acted as resistance. So if you're on the bullish side, you should be concerned about the market potentially ending the momentum right here at 1.26387. And this is the previous level of resistance. But then the expectation is that the pound continues strengthening against the US dollar. So that's it for the day. I'll be checking to see if you guys have any questions before I end the session. Good question. Should we wait for the data to be released first and then trade to its direction? Yes, absolutely. I always say that if you want to trade, you want to minimize risk by making sure you are trading from an informed perspective. So in this case, as you trade, make sure that you wait for the data to come out, understand what the data is telling you, understand the difference between the expected outcome and the data you are getting. And once you understand that, then you'll know exactly where maybe to allocate your positions. So a very good question. Does CAD news affect gold? Rarely does it happen. It doesn't normally affect gold. So whenever there is economic news about the Canadian dollar, the best way to approach this is to try and trade the Canadian dollar pairs. But also you could also consider maybe trading Brent oil or even US oil, which tend to have a correlation with the Canadian dollar. So when oil is strengthening, the Canadian dollar strengthens. When oil is weakening, Canadian dollar weakens, mainly because oil is a major export in Canada, and it tends to dominate the movement of the Canadian dollar. So on this case, if there is news affecting the Canadian economy, then it's best to associate that with the most direct asset. And in this case, it is the Canadian dollar. So thank you very much, guys. Thank you for your time. And I hope to see you on the next session. And remember to watch or listen to the latest episode of the Bullish Banter podcast. We have quite some good content that we have shared. Remember, the Bullish Banter podcast is available on all platforms, including YouTube, Spotify, Google, and Apple podcasts. So thank you, guys. See you then.